Back in 2008, we had the housing crisis. And when we had the housing crisis changed everything, right? You know, houses went really, really cheap. There was a lot of foreclosures, a lot of interesting things that were happening, but it posed an opportunity for people who were liquid, for people who had credit to be able to take advantage of a very, very unique time in the market. And there was a lot of people who got wealthy within that time frame. Anytime you see a market go up, you can make money. Anytime you see a market go down, you can make money. And a lot of people really truly don't know how to capitalize on this. Now, something just recently happened that the government has stepped in and have done something that I want to assist a handful of you out there that really are paying attention on how to capitalize on what the government has just recently done. Now, we can't deny what's going on with carnivores this, carnivores that, carnivores this, carnivores that. Like maybe you're not afraid of it, and I can dig it. It's whatever the case may be. However, fear sells. Whether you like it or not, fear sells. Whether you believe in this virus or not, it's irrelevant. Whether you think that it was man-made in a lab, it's irrelevant. What I'm talking about is how to capitalize in a way that could change your bank account based on what the government has just done. So here's what I mean. Last week, the stock market took a massive hit. The stock market took a massive hit, the biggest drop in the history of them tracking the stock market. And it took a hit every single day, every single day, every single day. Then at the beginning of the week, pow, it jumped again on Monday. Then on Tuesday, it went up a little bit again, okay? Then today, it took a 1,000 point shaving today. So it took a 1,000 point shaving today. So we've got something on and people are scared. So they're pulling money out. They're pulling money out. The airlines are getting hammered. The banks are getting hammered. Okay. Now, how do you capitalize on this? Well, the Feds got paranoid, right? And the Feds saw what was going on with the market. And they saw that there were shows being shut down and airlines canceling flights and all these different things that were affecting the economy, that are affecting the economy because people aren't doing as much now. So the Feds came in and they shaved the Fed rate by 50 basis points. So they did an emergency meeting and they shaved the Fed rate by 50 basis points. Now, what does that mean to you in English? In English, when they shaved the federal rate by 50 basis points in an emergency meeting, historically over time, anytime the government has stepped in and have shaved the actual interest rates at an emergency meeting right before the official Fed meeting that's happening in the next 2 weeks, they cut it again. They cut it again. Now, some of you are like, well, said, what does that have to do with me? First of all, the interest rates on your savings account that you weren't making any money on before are getting even lower. They're getting even lower. So if you've got money in a savings account right now getting 0.0001% or whatever the case may be, you're going to get like 0.00000001%. Okay? CD rates are going to go down. So if you are locking up your money for 3 years, you're locking up your money for 5 years, the rate of return on those CDs are going to get even lower now because the Feds just cut the rates. But how do you make money on this? Because I'm telling you some of the negative stuff right now. How do you make money on this? So I put together a couple of notes to help you guys out. You've been hearing me talk about this over and over and over and over and over. And before I say any of this, I'm going to be vague on a couple of things because sometimes people like to take the stuff that I say and like, you know, put it as a nail on something. I am not a financial advisor. I do not play one on television. I do not play one on Facebook. I am not here giving you financial advice. I'm just telling you what I'm doing, and you can feel free to do what you want to do. Consult your very own financial advisor, someone that is a professional. I am here just telling you this information on Facebook, okay, or on YouTube, or wherever you are hearing it at. I am not in any stretch of the imagination giving you financial advice. So you can already say this is for entertainment purposes if you choose to say that or whatever. Number one, the first thing that I'm going to tell you that's going to happen right under your nose right now, in case you haven't noticed, you guys have been hearing me talk about this for years and years and years. And I've always been investing in it. And some people just thought I was crazy. People don't think I'm crazy now. You need to buy some gold. You need to buy some gold. Now, you can sit around and not buy it if you want to, and paranoid and say, I don't know how to buy it and this and that. You didn't know how to drive a stick shift either, but now you can drive a stick shift without looking at the gears, okay? When you don't know something, you go out to learn it, okay? Right now, as I conduct this video, gold is trading at $1,673 for 1 ounce. For 1 ounce. A little less than a year ago, gold was at 1,500. It's at 1674 right now as we speak. Now, there are a ton of recent Facebook posts that I've done over the last, I would say, 6 months. I don't have time to go back on my phone and look at all of them right now. But if you've been following me for any period of time, every couple of months or so, you hear me post something about gold in some way, shape, or form. For those of you that have been following me for any stretch of for any length of time. So why is gold going to continue to go up? The interest rates are going down. The dollar is weaker. And the stock market is getting smashed. When you've got the stock market getting smashed and it's going like this, when you've got the interest rates going down and you have a weak dollar, gold just goes boom, because people need to put their money somewhere that is safe. And they're putting it in the gold. You don't have to listen to me. You can ignore me. People ignored me when I told them 1,200. They ignored when I told them 13, 14. They ignored when I told them 15. Now it's 1674. I'm going to be cutting a video here in the next couple of months when it's 2,000. And some of y'all have taken advantage of it. And there's going to be a couple other people that are going to be like, well, I don't know. Well, should I invest in crypto? Crypto is cool. I'm not a financial investor. I'm not a financial advisor. Do what makes you feel good. All I'm going to tell you is this. Gold is the only real money. Period. End of story. The next thing that you might want to look at when it comes down to your money and what the government just did that's going to affect you and how you can capitalize on it, you need to fix your credit if you have bad credit. If you have bad credit, you need to fix your credit ASAP. There are plenty of friends that I have that are in the MLM arena that can help you with fixing your credit. Or you can link up with another company or whatever the case may be to fix your credit. But you need to fix your credit right now. You need to get some additional trade lines on your credit right now, like yesterday. You need to do it like yesterday. You need to have a lighter under your butt when it comes down to this. Why is that such a big deal? As the interest rates are going down right now, they just cut them 50 basis points. They're going to cut them again in the next couple of weeks. The rates on your car notes are going down. Now, for those of you that have car notes right now, you do not have an adjustable rate on your car note. You have a fixed rate on your car note. So let's say that your credit was a little bumpy and you've got a 17% interest rate on your car note, which means that you're paying for your car 4 or 5 times. You need to change that. You get your credit fixed. You can now go and refinance your car and get a better rate on your car because of where the rates are. All the rates are going to be lower. They're already lower right now. Okay? Some of you might be paying 20-some-odd% on a car note. You can refi that. Drop that payment. Let's say you had good credit. Let's say you had good credit and you've got a 5% interest rate on your car note. And you're like, hey, 5%, I got a 5% interest rate on my car note, Sid. That's not a bad interest rate on a car note. However, what if you could go to the bank right now and turn that 5% into 2.5%? What would that do to your payment? What would that do to your car payment? And that would actually end up putting more money into your pocket. That's going to put more cash back into your pocket that you can do more things with. The next thing that you want to look at is that if you own a home right now, you need to refinance. You need to refinance. 30-year fixed rate mortgages right now for people with good credit are at 3.5%. 3.5% 30-year fixed rate mortgages. I'm not talking about adjustable rates that are going up every single year, or it's just fixed for 3 or 4 years and then it's based off of a margin. No. 30-year fixed rate mortgages right now are 3.5%. And I talked to my mortgage broker today. There's a good chance when they do that next cut again in the next 2 weeks that they're going to go down to about 3.2. They're going to be at about 3.2, which is the lowest that it has been in forever. 3.2% money on 30-year fixed rate mortgages. If you haven't recently purchased a home, or if you haven't recently refinanced, like within the last 90 days, there's a good chance that 99% of the people that are looking at this video right now do not have a 3.5% 30-year mortgage right now, period. Now, you might say, well, said, I've been in my house for 13 years and I've got 17 years left on my mortgage right now. Why would I refinance back to a 30-year mortgage? I have a mortgage background. Here's why you would refinance back to a 30-year mortgage. You might have 17 years left on your house, okay, on your mortgage payment right now at 5.5% interest. And you're like, I'm going to pay this thing off in the next 17 years anyway. Why go to a 30? Take that 5% down to a 3.5%, stretch it back out to 30 years, drop your payment by $300 to $700 a month, and then continue to make the same payment that you were already making, and you would turn that 30-year mortgage that was at 17 years, and it might end up being 11 years, and now it's paid off. You just shaved off another 7, 8 years. Do you know what 7 or 8 years of interest looks like on a home? Ay, 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 ay. Do you realize that the first 15 years of most home mortgages, 15 years, you are paying 90% interest. The first 15 years. Most people just don't understand how interest really works. It can work for you or it can work against you. Now, if you've got 3.5% 30-year fixed rate money, smalls, refinance the house. Okay. 15-year rates are right around 2.9, 2.8, 2.9. A 15-year fixed rate, 2.8, 2.9. See, all this carnivore stuff that's going on right now, people don't understand how they can capitalize on certain things. Instead of you being paranoid, you need to look at what's going on around you. The Fed, by default, wants to stimulate the economy. Okay, they have to stimulate the economy. Okay, we are going into spring. Spring and summer is the housing buying season. Spring and summer. That's when people buy their houses. Okay, now they want to make sure that the housing market does not crash, because if the housing market crashes at the same time, we, my friends, are in another recession. Period. End of story. Period. End of story. So they're cutting these rates, which is affecting the mortgage rates, which is affecting your credit card interest rates, which is affecting the CD rates on CDs, which is affecting the savings rates at banks, which is affecting the rates on car notes. It's affecting all these different things to give you as a consumer more discretionary spending money. Next thing that you might want to look at. If you are renting a house right now, and you have good credit, you might want to pay attention and start looking at some property. Because at 3.5% fixed rate money, there's a good chance that the mortgage that you will have will be a lot cheaper than your rent. And now you own something. Now you don't have to call the landlord when you want to paint the house. Now you don't have to do this or do that or blah, blah, blah. You got to ask somebody permission. Now, hey, there's pros and cons to renting, just like there's pros and cons to owning. Okay. All I'm going to say is this. When you've got 3.5% fixed rate money, you might want to take advantage of that, because you're not going to see 1% mortgages. You're just never going to see 1% mortgages. But if you can see 3.25% mortgages or 3.5% mortgages, you want to pay attention to that. Now, I'm going to talk about this one here really quickly, but I'm going to dance around this because I don't know where this video is going to end up at, and I'm not going to have anybody come back to me and say that I played financial advisor. Okay, the stock market is taking a 1,000 point hit. So let me look right now exactly what it took today. So let's see what the Dow took today. All righty. Let's see here. I think it was 900 some odd points. So let's see. Let's see what it shaved off today. 969 points is shaved off today. So down 3.5%. NASDAQ is down close to 300 points today. 3.1%. Okay. Let's see. The S&P futures are up 0.19. And the 10-year yield, the bond market, woo-wee. If I'm talking Chinese to you right now, you want to learn some of the stuff that I'm talking about. I pay close attention to money. All right, here's the thing. Stock market is taking a hit, right? The futures are up right now, so it's probably going to open up with some green tomorrow. But everybody knows Fridays are not the days that you invest in the market. Everybody knows that. So you want to pay very close attention to companies that sell sanitizer. You want to pay very, very close attention to grocery store stocks. I'm not giving any stock advice. I'm not saying invest in this company or that company. I am not a financial advisor. I do not play one on Facebook, nor do I play one on television. All I'm going to tell you is this: do your own research. Do your own research, because the market is getting pummeled up and down, up and down, up and down. But there's a couple of companies based upon what's happening right now that are on the rise because of stuff that people have to buy. I don't know if you've gone to your local Walgreens or CVS here recently, but you can't find sanitizer to save your life. Okay? Can't find it to save your life. You can't find mask. You can't find mask right now to save your life. Okay? To save your life. Okay? Soap. Everybody's washing their hands like crazy right now. Everybody's washing their hands like crazy over and over and over and over and over again. Okay? And then grocery stores, people are buying stuff left and right at grocery stores. Now, some of y'all are like, well, said this is all fear and this and that and blah, blah, blah. Call it what you want to call it. Call it what you want to call it. Okay? Here's what I figured out about making money. When you invest money, or when you're looking to make a business decision, you do not make an emotional decision. When you make business decisions based off of emotion, that's when you lose money. Let me repeat that for the people in the nosebleed seats. When you make business decisions that are emotional, that is when you lose money. So if we look at this from a logical perspective, common sense says, if XYZ company is creating sanitizer and sanitizer is running out and everybody's buying up sanitizer everywhere, there's probably a good chance that that stock is going up. If everybody's going to the grocery store loading up on all the stuff, there's probably a good chance that there's certain grocery store stocks that are going up. I done seen a couple of them over the past 2 weeks get ballistic. I'm not going to say any names because nobody's going to get me hemmed up here on Facebook. You got to go and do your own research, okay? You got to go and do your own research. All I'm going to tell you is that you are able to capitalize on what is happening, whether it's based off of masks, whether it's based off of soap, whether it's based off of sanitizer, whether it's based off of grocery stores, whether it's based off of companies. Everybody think that Amazon is the only company that delivers, right? That delivers goodies. There's a couple of different companies out there that are blowing up right now, because people are sitting at home ordering all this stuff, just getting it delivered to their house. You need to find out what those companies are. And I ain't talking about UPS or FedEx. I'm not. That's it. That I'm going to talk about anyway, that I can be, that's all I'm going to talk about anyway. Because I don't want to get too deep on this, because I'm not going to say everybody, there's going to be a lot of people who just aren't going to get this. And then I'm really not interested in having like 20,000 inbox messages of people asking me on the sly, you know, what stock do you think, Sid? I'm not giving stock advice. All I'm saying is pay attention to what's happening around you. Pay attention. If you got 3.5% money, you might want to take advantage of it. If you own a home right now and you paying 5% interest rate or 5.5% interest rate, and you thought that was a good rate a couple of years ago, and a couple of years ago it was, you need to get on the phone and call your mortgage company and say, hey, what can I do to refinance this thing? I heard there's 3.5% money out there. I heard there's 3.25% money out there. Like, lower your payments. Lower your payments. You're paying $1,000 a month on rent right now, and you've got a decent credit score, and there's all this liquidity that's out there right now. Before anything dries up, you might want to say, hold on for a second. Maybe it's time for me to go out there and buy something. And the funny thing is, I'm not even going to say the funny thing is, the interesting thing is right now is that I heard yesterday that inventory is down in the housing market, 3.3 million homes. That's how inventory is down. So here's what happens when you get these low interest rates, right? If it's not happening in your backyard right now, you're going to see it. A good friend of mine just called me about this. He's actually on here. Morris, what's up, Morris? So Morris just called me about this literally because he was asking me this question 2 days ago, okay? So he went and looked at a house, and he liked the house, and the house was sitting on the market for a year. Okay, then he went and put an offer on the house. When he finally put an offer on the house, then there was 3 or 4 more offers that came in on the house that ran the numbers up on the house another $25,000. Why is that happening? Why is it happening in so many different markets? It's happening in so many different places because money is so cheap. When interest rates get this low, that means that your buying power has been increased. So you as a consumer, your buying power is one number at 5%, but it's different at 3.5%. So that $300,000 house that you were looking at 5% has XYZ payment, but that $300,000 house at 3.5% has a much lower payment. So now, if you said, well, I could afford it at 5%, you willing to pay $320 for the house. You willing to pay $330 for the house. You willing to pay $340 for the house. Okay? Now, this could also send us in a bubble. Because what ends up happening is that people take their properties, and now their properties or they might not even really truly be worth more money. But the reality of it is that because the supply is so minimal and credit is so cheap, that people are coming in and they're getting into bidding wars, running up the numbers on the house just because they can get low interest rates. You got to pay attention to this. You have to pay attention to this. That means that you got to be picky when you're out there house shopping. And if you find something that you like, it's behoove you to not procrastinate. It's behoove you to not procrastinate because people are running up numbers everywhere. And some of you might be like, well, say you're in Florida. They always run up numbers in Florida. No, Mars is in South Carolina. This is happening in Virginia. This is happening in Mississippi. This is happening in Idaho. This is happening all over the United States. This ain't a Florida thing. This is happening all over the United States because inventory is low. Inventory is low and interest rates are low, and it's going to move the numbers even higher. Ladies and gentlemen, take advantage of what's happening. If you're renting, you might want to look at buying right now. If your credit is messed up, you might want to look at getting your credit fixed so you can refinance that car note and drop that interest rate down. You might want to refinance that house or whatever the case may be. You know, be smart about it. If you've got money that you got sitting around and you've got it in a savings account right now, the savings account rate is going to get even lower. The money market account rate is going to get even lower. And if you're locking up money for 3 years or 5 years in a CD, that's going to get even lower. So you got to put your money in different places that's going to give you a better rate of return on your money. And for the last time, I'm going to say this, and I said this at the beginning, for the last time, go get you some gold. 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 1674 ounce right now. It is March the 5th, 2020. Feel free to come back to this video on March the 5th, 2021. And there's a really, really good chance that gold ain't going to be 1674. The Fed chairman is proving it to you as we speak. And if you look at the gold chart just from let me just pull it up. I'm just want to pull it up for shits and giggles. I'm gonna do gold chart. I had a friend of mine tell me I was crazy um, for investment gold about a year ago. Told me I was crazy. I'm like, yeah, I'm crazy. Okay, okay. All righty then. Let's see here. July. Hold on, that can't be right. That's the wrong chart. That can't be right. 2015, 1158 an ounce. 2016, 1251 an ounce. 2017, 1260 an ounce. That was just less than 2 years ago, right? No, that was a little over 2 years ago. 2017, 1260 an ounce. Let me go to this 1 year chart here. I'm trying to get the right 1 year chart. Here we go. All righty. Let's see. March. Yeah, this is it. Okay. All right. For people that just don't understand money and how it works. March, gold was 1,300 an ounce. April, it was hovering around 1,300. May, it was hovering around 1,300. June, it jumped up to 1,400. August, it was at 1,500 in August. September, it was kissing 1,550. Then it shaved down a little bit over the past couple of months. February, oh man, come back. February of this year, sitting at 16. March the 5th, 1674. I know I got some posts back just the earlier part of the year, last year as well as this year, talking about this. Just imagine, from 1,300 to 1674. I mean, I don't know of any checking account right now. That's 10%, that's 20%. That's a 20% gain in 9 months. I don't know of any checking account right now that you got a 20% gain on your money in 9 months. Show me one checking account or one savings account that you made 20% on your money in 9 months. Show me one. Show me one. Feel free to inbox me and let me know. Now, I'm not talking about my crypto boys because I'm in the crypto game as well. So I understand that game. And yeah, you can make all sorts of gains in the crypto world, but you have to have a strong stomach as well. And if you ain't got a strong stomach, you can't play the crypto game. If you've got a solid stomach, you can play the gold game because gold is the only real money that we got out there. They print the paper. They print dollars. They print that stuff. That's not real. That's called a note. That's not real. Okay. God didn't make that. God made the paper. The government made the note. God made gold. That's the only real money. Ignore it if you choose. But based on what's happening with the interest rates right now, and based on what's happening with the dollar getting crushed right now, based on what's happening with the markets right now, based on the scare of the coronavirus, based on the fact that the banks can't really make any money when they keep dropping these interest rates like this, the big institutions are rushing into a safe haven. You might want to pay attention. So with that being said, I'm going to end this specific video by again stating I am not a financial advisor. I do not play one on television. I do not play one on YouTube. I do not play one on Facebook. I am not here giving you any financial advice. I'm just giving you an observation of what's happening inside of the market and an observation of some of the things that you can do to keep more money in your pocket as well as to make more money, whether you are an entrepreneur or not. So hope you guys got some value from this video. I gotta go. God bless you all. I appreciate you. Have a phenomenal day, and we'll catch you on the next video.